Good morning, Adams County. Welcome back to week 2 of our summer program. Today we're going to be talking about loans and paying for college and how you can really afford to be able to finance your education. So to get started, the first thing I really want to talk about is dispelling some of the myths about college and paying for it, because there are a lot of them out there. And first of all, yes, college prices have gone up. Inflation on that over the past 50 years has essentially skyrocketed. And also on the flip side, the overall student debt, which is all students combined across the country, has also gone up. However, the amount of time that it takes for you to pay off student loans is at the lowest it has been in over 50 years. On average, it only takes 10 years to pay back student loans now. Back in the 1970s and even earlier than that, it took as much as, well, I don't even know, just a lot more time than 10 years. So now it is a lot easier for you to pay back your loans, in part because having a college degree makes it so that you earn twice as much as someone who doesn't earn a four-year or any type of college degree. In actuality, it's really like 98% more, but for this case we'll say it's twice as much, just because that's a cool number. So it is really important to know that while the price of college has gone up, it is essentially at its most affordable point for you right now. And so now what I want to get into is just a brief overview of financial aid, so that way we make sure that we're all on the same page here and make sure we're understanding what we need to be talking about. So what happens is you all did the FAFSA, or hopefully you did the FAFSA, the Free Application for Federal Student Aid, and what that determined is it helped to figure out your EFC, or Expected Family Contribution. And that's the amount of money that your family is expected to pay towards your education at whatever college you choose to attend. Colleges use that number to determine how much financial aid to give you, and this can come in kind of two ways. So there's the need-based aid, there's merit-based aid, and just other scholarships that you might have. Now the important distinction to make is that your scholarships, grants, or anything else that you might receive specifically from the college are what we call gift aid. That means it's money that you don't have to pay back. You also might receive an unsubsidized or subsidized loan, and this is money that you do have to pay back because these are loans. Those two loans in particular are through the government, so you will pay money back to them instead of paying out to a private bank or a private lender, something like that. That's not to say that you can't get a loan from a private lender, but most of your financial aid packages will include a loan or two from the government. So when you received your financial aid award letter, you might have seen something that kind of breaks it down in terms of what all awards or scholarships you got from a college. And then you'll see what your total financial aid is. So if you take that total financial aid and subtract it from your total cost of the school, that is going to be your total out-of-pocket costs. What your out-of-pocket cost means is this is the money that you will need to find a way to pay. So whether that is going to be money that your family just pays themselves, it could be money that you take out in private loans, or you might even be able to get some more loans through the government, through the Parent Plus loan, which we'll talk about in a little bit. Alright, so one of the most common ways that people will choose to pay for this part of their college education is by taking out a loan. And so you might be asking, what all is part of a loan? A loan is the principal amount of money that you agree to borrow. And you may then be asking yourself, what is this interest thing that they keep talking about? Interest essentially is a percentage of the total principal amount of money. So let's say you got a loan worth $2,500 and you have an interest rate of 5%. What that means is that you will be required to pay back 5% of that total principal amount in addition to the principal payment that you make back. So you may be wondering then, how do I find a loan? And where is the best place to get one from? A good place to start, depending on if your college offers it or not, is to get a Parent Plus loan. So what this means is that your parents will be able to get out a plus loan through the government, and that can cover up to however much is left of your total expenses for you to go to this college. So let's say that the total cost of your college is $25,000 and you're receiving financial aid for, I don't know, $18,000 of it. That leaves $7,000 left. So you could get $7,000 in this Parent Plus loan. What it means is that the loan is in your parents' name, and they officially will be responsible for repaying the loan. However, they can choose to defer payments because it's supposed to be set up that you begin paying back once you receive the funds. They can actually defer the payments to start after you have completed your 4-year or 2-year degree of college. So to find out if your college has the option of a Parent Plus loan, take a look at your financial aid letter. It usually will indicate somewhere on there if you are eligible to receive a Parent Plus loan. And if it doesn't say on there, call the financial aid office. If you are not eligible to receive a Parent Plus loan, that means you could receive some more unsubsidized federal loan. The difference between an unsubsidized and a subsidized loan is that with a subsidized loan, the interest is paid for you while you are in college. An unsubsidized loan means the interest will accumulate even while you're in college. So those two loans are two loans you can get through the government in addition to the Parent Plus. And if you can't get that Parent Plus loan, you will be eligible to receive more unsubsidized loan money. If that applies to you, do call your financial aid office and let them know that you weren't eligible for that Parent Plus loan, and they can work on helping you figure out the next steps to make sure you get that increased amount. So you may ask yourself, is it better to get a private loan or a loan through the government? And that is a good question to have. Ideally, you want to start off trying to make sure you get as much as you can through your government loans. So that's your unsubsidized, your subsidized, and your Parent Plus loan. If you can't get anything from those, then I'd say take a look at your private loans. Trick for this is don't go with the first offer. It might be a good offer, but you want to make sure. So go around to maybe some other banks, maybe the bank that your parents have an account at. See if they have any educational loan offerings. Check on what type of interest rate they have, what sort of payment plans they have. And all of the things combined will help you determine if this is the best loan for you. Some loans are dependent on your parents' credit rating, so that might influence then what your interest rate is or what type of payment plan you have access to. It is important to maybe go to a place that your parents have a good relationship with, so that way they can have a good idea of what type of people your parents are, and they know, yes, this person will pay this loan back on time. Some of the differences that you might see between a federal and a private loan would include that federal loans typically have lower interest rates than your private loans. They also tend to be a bit more flexible in their payment periods. They also have what's called an incremental payment plan, which depends upon your income once you've graduated college. That way you won't have to make maximum payments when you're making a lower salary. However, again, it is important to check with these private lenders to see if they have a similar interest rate or similar payment plans available. Depending on where you get the loan from, it might be comparable to one of your government loans. So for many of you, this may be the first time that you are having to apply for a loan or aren't sure of what your next steps are. In which case, you can go down, there's some links in the stuff, and you can check them out, and you can actually set up a meeting with me, or if you want to call, we can set up a phone meeting time. You can use my speakerphone, it's super fun. So if you want help or assistance, don't be afraid to reach out to me or your financial aid counselor from your college, and we will help you figure out what your next steps are. There are also links down below to all of the facts that I mentioned before about debunking those paying for college myths. Alright, Adams County, that's all for this week. Remember, don't be afraid to ask me if you have any questions about financial aid or anything like that. I'll be happy to help you out with that. Alright, I'll see you next week.